Welcome back to the Pro Ticker Podcast, your Monday morning edition, covering major financial magazine headlines, everyone.
Yeah.
Create a long, detailed podcast episode with in-depth analysis, balanced opinions, dynamic conversation.
It's going to be a good one.
It is going to be a good one. And you know what? It feels like AI is just the word on everyone's lips this morning. But at the same time, the U.S. markets are near record highs, but investors are kind of nervous.
Yeah, there's definitely a tension in the air.
There is this tension, right? It's like, what's going on?
A lot of uncertainty.
Exactly. So we've got some great sources to help us kind of sort through this whole mess. We've got CNBC, MarketWatch, Bloomberg, The Wall Street Journal. Let's start with CNBC and this Alibaba story. Their shares are just going crazy.
Through the roof.
Through the roof. All this like hope and optimism about Chinese AI advancements. What's going on?
Well, it's not just HUP. Their AI product revenue has been growing like crazy.
It's like crazy how?
Triple-digit pace for 6 straight quarters.
6 quarters. That's wild.
It is.
And they're going head-to-head with DeepSeek. They even won a deal for iPhones in China. And
Which is huge.
Huge, I know. And then CNBC even mentioned Jack Ma's recent public appearance, right? Alongside DeepSeek's founder with President Xi Jinping.
Talk about a power move.
Power move. What is going on?
It definitely signals that Alibaba is serious.
Alibaba's not messing around. But then Morgan Stanley steps in, and they're urging caution. They're talking about Alibaba's increased capital expenditures and all these potential risks, like weaker Chinese consumption. So
Makes sense.
it does. What's your take on this? Is Alibaba's success here to stay, or are we maybe getting a little bit ahead of ourselves?
It's a good question. I think Alibaba's success definitely shows how quickly China is progressing with AI. The government is really backing it, and they have so much data to work with.
Right.
That's fuel for AI. But Morgan Stanley's concerns about spending are valid. Investing in data centers and talent, that's expensive.
Oh, yeah.
If the revenue doesn't keep up, that can hurt their profits.
So proceed with caution.
Yeah, I'd say so, especially if you're just investing based on the AI hype.
Don't just jump in because of the hype. All right, well, let's shift gears a little bit and talk about the U.S. market, Bloomberg MarketWatch, and the Wall Street Journal. They're all talking about this anxiety among investors,
Yeah.
even though the markets are near record highs. What's going on here? Why is there this disconnect?
I think there are a few things happening. Bloomberg points to President Trump's policies. You know, the tariffs and immigration restrictions, that creates uncertainty in the market. Uncertainty can affect corporate earnings and economic growth. That makes investors hesitant, even when things seem good on the surface.
Interesting. And the Wall Street Journal also pointed out this big gap in valuations between large U.S. growth stocks and cheaper alternatives. Historically high gap. Actually, could this be a sign that a correction is coming?
It's definitely a possibility. High valuations sometimes mean that investors are too optimistic and that the market might be due for a pullback.
A little reality check. And then we have MarketWatch talking about the fear of a stock and crypto bubble fueled by young traders.
Yeah, those who haven't really experienced a major market downturn.
So they don't even know that.
They're a bit oblivious to the risks.
They're just going for it. Interesting. So what should we be watching for? What are the key indicators here?
Well, inflation is a big one. MarketWatch says rising prices are affecting how consumers feel, partly because of those Trump tariffs. We'll get more data on that next week with the PCE index.
The Fed's favorite inflation gauge.
Exactly. The Fed will be watching that closely to decide on interest rates.
Okay.
And depending on what happens with inflation, it could impact the entire market. And of course, we have to keep an eye on the whole AI story, too.
Right.
Is it as big as everyone thinks, or are we setting ourselves up for disappointment?
The hype versus the reality.
Yeah.
And speaking of AI, MarketWatch has this report about Microsoft canceling data center leases.
Interesting.
It kind of goes against the whole narrative of explosive AI growth, doesn't it?
On the surface, yeah, it seems strange, but remember, data centers are expensive.
Oh, yeah.
Microsoft is probably always looking at their needs and making adjustments.
So are they scaling back their AI ambitions?
It's too early to say. Some analysts think it might be connected to OpenAI. You know, the company behind ChatGPT, Microsoft, owns a big chunk of that.
Right.
Maybe they're changing their data center strategy to fit OpenAI's needs.
Okay.
Or maybe they're just trying to be more efficient.
Interesting. So a bit of a mystery.
Definitely. It's worth keeping an eye on.
Absolutely. And I think this situation with Microsoft just shows how complex the whole AI investment landscape is. Is it all hype, or is this the real deal?
That's the million-dollar question.
It really is. All right, let's move on to a company that's making waves in a completely different sector. Walmart Bloomberg has a fascinating feature on their transformation under CEO Doug McMillon.
Walmart, what are they doing?
They're trying to get rid of that discount image, attract wealthier shoppers.
Wow.
Bloomberg talks about their store redesigns, trendy clothing lines, and their booming online marketplace.
So they're trying to go upscale.
Yeah, it's almost like they want to be a higher-end version of themselves.
That's a big shift.
Right. They even have their own private label food line now.
Really?
Yeah, fancy packaging, artisanal ingredients, the whole 9 yards.
Wow.
And to attract top talent, they built a huge Google-esque campus in Bentonville, Arkansas.
So is it working?
Bloomberg says their online sales are through the roof. They're seeing growth in higher-income demographics. But there's some challenges, too.
Like what?
President Trump's policies, especially the tariffs, could make it harder for them to keep prices low.
That's a problem. Low prices are Walmart's bread and butter.
Exactly. And then there's the whole political aspect. Bloomberg points out that Walmart is trying to appeal to a wider range of customers, which means navigating this very politically charged landscape.
Yeah, that's a tough one.
They're already facing pushback from employees who aren't thrilled about relocating to Arkansas.
Because of the state's policies.
Exactly. So they're walking this tightrope.
It's a delicate balancing act.
It really is appealing to a diverse customer base while also dealing with these potential political and economic headwinds.
I wonder how it'll all play out.
Me too. It's going to be interesting to watch. All right, let's zoom back out for a moment and talk about investor sentiment again.
That feeling of unease.
Yeah, even though the markets are doing well.
Like a nagging worry you can't shake.
Exactly. And what's interesting is how age seems to be playing a role here. You know, that NASDAQ and Tasty Trade survey that showed younger traders are more likely to think we're in a bubble?
Yeah, but they're also more bullish overall.
Right. It's like they know the music could stop at any moment.
But they're still dancing.
They're still dancing, and maybe that's the kind of attitude you need in today's market. But it makes you wonder, what happens when the music does stop? Will they panic?
Good question. Will they learn a tough lesson about market cycles?
We'll have to wait and see. But it's definitely a dynamic worth watching.
For sure. It could have a big impact down the line.
All right, so we've talked about AI, global markets, investor sentiment, the Magnificent Seven, Walmart's transformation. It's a lot to take in.
A lot to digest.
And we haven't even touched on Microsoft's data center mystery yet.
Oh, right. That's a big one.
So let's dive into that next. What could be behind this strategic move? Does it suggest a broader trend in the tech sector? Or is this something specific to Microsoft?
It really is. And it kind of makes you wonder, is it a sign that maybe the AI hype is starting to cool down a little bit?
Or is it just Microsoft being strategic?
Yeah, I mean, it's possible that they're just kind of like, adjusting their data center strategy to kind of align with, their evolving needs. I mean, they've poured a ton of money into AI infrastructure these past few years. And so maybe they're just like, okay, we need to kind of optimize, where everything is.
Right.
But you're right. I mean, it could be that this is a sign of like a bigger shift that's happening in the AI landscape. What if the growth isn't quite as like explosive as analysts thought it would be?
Right.
Or what if the costs of actually developing and deploying AI are starting to, weigh on companies?
Make them think twice.
Yeah.
Yeah. And it's interesting to think about this because, we've seen other tech giants like Amazon and Google. They're also facing challenges in their cloud computing businesses.
Yeah, the competition is getting fierce, and those profit margins, they're not what they used to be.
So maybe the AI boom isn't as straightforward as we all thought a couple months ago?
Yeah, it's definitely becoming more complex. I think those early days of just like crazy growth and easy profits, they're probably over.
Right.
The industry is kind of maturing now.
So for investors, that means you need to be a lot more careful.
Yeah, you can't just jump in blindly.
Exactly. So what should we be thinking about? What are the key factors when you're trying to evaluate these AI investment opportunities?
Well, one thing that's super important is the company's track record.
Okay.
Like, have they actually shown that they can develop and use AI to, actually create value?
Right, so they've got the experience.
Yeah, and then you got to look at the competition, too. Like, are they in a super crowded market where it's easy for anyone to just jump in? Or do they have some kind of edge, something special?
Something that sets them apart. And, of course, we have to talk about their financials, too, right?
Of course. Can't forget about the money.
Exactly.
You got to look beyond the hype and see if they're actually making money. Are they growing? Are they profitable? And are they, smart with their investments? Are they managing their costs?
It's all about the fundamentals.
It really is. You got to look under the hood.
Exactly. And I think, another thing that's really important that we keep coming back to is the market context. All those geopolitical risks, the economic challenges.
Right, all that uncertainty.
The potential for volatility.
You got to have the big picture in mind.
You can't just ignore it. So how do we deal with all of this? How do we navigate this crazy market?
Well, there's no magic bullet, but one thing that's always helpful is to just stay informed.
Okay.
Read the news. Keep up with the trends, pay attention to what's going on in those industries and companies that you're interested in.
So do your research.
Yeah, and don't be afraid to ask for help. Talk to a financial advisor, read those investment newsletters.
Right.
There's tons of information out there.
You don't have to do it alone.
Exactly. There's a whole community of investors.
Okay, so let's switch gears for a second and talk about Walmart again. We were talking about how they're really trying to shed that discount image.
Yeah, trying to appeal to wealthier shoppers.
But Bloomberg brought up some interesting points, about the challenges that they're facing, like the tariffs, how that could really impact their pricing strategy.
Right. I mean, Walmart's customers, they're very price conscious. If prices go up, they're going to go somewhere else.
Right.
And those tariffs are already putting pressure on costs, So Walmart's kind of caught in the middle.
Yeah. And then there's the whole political side of things, too, like trying to appeal to a wider range of customers, but also operating in this super polarized environment.
Yeah, Bloomberg mentioned that those employees that aren't too keen on moving to Arkansas.
Right.
It just shows you that these days, every corporate decision, it gets viewed through this political lens.
It's unavoidable. So how do they manage this balancing act?
Right. How do they keep everyone happy?
How do they, appeal to everyone and stay true to their values?
Well, I think, a big part of it is just focusing on those core values and communicating them clearly to their customers, to their employees.
So transparency.
Yeah, be upfront, be authentic.
Because at the end of the day, consumers, they can smell a fake a mile away.
Right. They know when you're not being genuine.
Exactly. So Walmart's got to be real about this.
Yeah, they got to show that they're truly evolving and that they're adapting.
And it's not just about the image either, right?
Definitely.
They've got to actually deliver.
They got to walk the walk.
Exactly. And Bloomberg talked about, their store revamps, the new clothing lines, the online marketplace. But those things have to work.
They have to actually appeal to those higher income shoppers that they're going after.
Right. It's about finding that balance between, the core customers and then those new customers who want something a little bit more.
A little fancier.
Yeah, exactly.
It's a tough challenge.
It is. But Walmart's got the resources.
Yeah.
And they've got the experience.
They got a shot.
They do. Okay, so let's bring it back to those young traders for a minute.
Those fearless investors.
Yeah, the ones who are, kind of aware of the bubble but still all in.
It's fascinating, isn't it?
Right.
It's like they've grown up in this world where everything's just been going up, so they have this totally different view of risk.
Right, like it doesn't even faze them.
Yeah, and you saw it in that NASDAQ and Tasty Trade survey, right? They're more likely to say that, yeah, we're in a bubble.
But they're still bullish.
But they're still like, let's go!
It's like they know the party's going to end sometime.
But they're going to dance until the last song.
Exactly. But the question is, what happens when the music stops?
Will they freak out?
Yeah, will they be like, oh my God, what do we do?
Or will they learn a valuable lesson about how markets really work?
About the cycles.
Yeah.
Yeah, it's going to be interesting to watch.
It really is. This could change everything.
It could. Okay, so let's just kind of like step back for a minute and think about, one of the big themes that keeps popping up in these headlines. And that's just how quickly the world is changing.
Yeah, and how important it is to adapt.
Exactly. Like Alibaba going all in on AI, Microsoft switching up their data center strategy, Walmart trying to reach these new shoppers.
It's like everyone's scrambling to keep up.
Right. And investors need to adapt, too.
Yeah, the old playbook, it doesn't work anymore.
So in this kind of like crazy environment of constant change, what are the most important things for investors to remember?
Okay, well, first of all, you got to diversify.
Okay.
Don't put all your money in one place. Spread it around different assets, different countries, different sectors.
The risk, exactly.
Stay informed. Pay attention to what's happening in the market.
Right.
Read the news. Follow the trends.
Do your research.
Exactly. Knowledge is power.
And what's the third thing?
Don't be afraid to get some help. Talk to a financial advisor.
Okay.
Read those investment newsletters.
There are resources out there.
Tons of resources.
You don't have to go it alone.
Nope. Investing can be a team sport.
Okay, so as we wrap up this segment, I want to leave our listeners with one last thought to kind of chew on. If you were managing a big portfolio right now, where would you put your money?
Ooh, good question.
Would you go for those U.S. growth stocks? Would you look at international value, or would you do something else entirely?
That's the million-dollar question, isn't it?
It is.
And there's no easy answer. But I think the important thing is to really think about what we've talked about today. Weigh the risks and the rewards, and then make a decision that fits your own situation and your goals. Your
risk tolerance.
Yeah, exactly.
All right, so let's take a quick break, and when we come back, we'll dive a little deeper into what all of this means for investors. All right, so, we've talked about so much in this deep dive. We've got AI, global markets, investor sentiment, those magnificent 7 Walmarts, big transformation, even a little bit of a data center mystery with Microsoft.
Yeah, it's been a lot. It really has.
It has. And I think, the big takeaway here is that things are changing so quickly, and there's just so much uncertainty in the air.
Yeah, the old rules, they don't really apply anymore.
No, they don't. But that doesn't mean that, we just give up.
No, not at all. We just have to change with the times.
Exactly. And that's why, your insights are so valuable. So if you were giving advice to an investor right now, what would be like your top 3 things?
Okay, well, first of all, diversify.
Diversify. Okay.
Yeah, don't put all your eggs in one basket.
Right.
Spread your investments around different assets, different parts of the world, different industries. That way you're not taking on too much risk.
Okay, so diversification number 1. What's number 2?
Stay informed.
Stay informed.
Yeah, read the news, keep up with what's happening in the market, understand the trends.
Do your research.
Exactly. The more you know, the better decisions you can make.
Okay, so diversify, stay informed. What's the third piece of advice?
Don't be afraid to ask for help.
Ask for help.
Yeah. Talk to a financial advisor.
Okay.
Read those investment newsletters. There are so many resources out there for investors.
Right. You don't have to figure it all out on your own.
No way. Investing, it's a community.
It is. All right. So as we wrap up this deep dive, I want to leave our listeners with a final thought to ponder. If you were managing a large portfolio right now, where would you be placing your bets? Would you focus on those U.S. growth stocks, international value, or would you go somewhere else entirely? What's your take on the AI landscape?
That is the question, isn't it?
It is.
And there's no one right answer.
Right.
But I think, it's important to think about everything we talked about today, weigh the risks and the rewards, and then make a decision that makes sense for you and for your goals.
Exactly. And on that note, we'll see you all tomorrow morning with new headlines from the major financial magazines. Until then, happy investing.